the banana zone is generally the last year to year and a half of crypto markets when prices start to go vertical. And I said back in about September that we were going to start the banana zone with that huge run up at the end of the year. And then we had this consolidation that was actually driven by the tightening of liquidity that happened last quarter, back in Q4 2024. That happens every cycle. So you get this first ramp up, then we all say, well, we can't have nice things. The market corrects. It's like, it's never going to happen. It's never going to happen. And then liquidity has to come to roll the debt. And that usually goes all the way through to the end of the year. And that becomes the banana zone. The banana zone is also when alt season happens.
Raoul describes the banana zone as the final, euphoric stage of the crypto market cycle, typically lasting a year to a year and a half. This phase sees parabolic price movements across Bitcoin, altcoins, and even meme coins, driven by FOMO, liquidity injections, and speculative trading. Pal highlights Bitcoin surpassing $100,000 and Ethereum's impressive gains as key markers of this cycle, while altcoins like Dogecoin and Pi Network lead a renewed surge in market excitement. Pal emphasizes that macroeconomic factors like central bank liquidity and falling interest rates are major catalysts driving this explosive phase. He advises focusing on liquidity trends, as they consistently lead price movement. Pal is particularly bullish on Dogecoin, viewing its potential breakout as a sign of retail exuberance and the beginning of altcoin season, where speculative assets thrive. The broader crypto market is attracting institutional interest, with sovereign wealth funds and governments exploring blockchain integration. Pal sees this as a transformational moment, offering unprecedented opportunities for wealth creation and financial inclusion, potentially propelling the crypto market from $3 trillion to $100 trillion over the next decade.
Yeah, so for me, what's exciting, because I look at the world from a macro lens.
Yeah.
From a macro lens, we've got all of these massive debts that need to be rolled. And we hear the governments are having issues with trying to roll the debt. The answer we know is the printing of money. And the printing of money for us in crypto means number go up. When number go up, it drives adoption. So we bring more users into the space, more applications get built, more VC money comes in, and the whole flywheel of crypto really accelerates. So 2025 is a year where we should see acceleration of prices, acceleration of activity, new applications, new things happening. And that's what drives the number so much further than other markets. So it's always an exciting time when it happens. But we've got all of the noise around tariffs and all of the things. And it was like, oh my God, we're all going to die. The economy's going to crash. It's all over. It's never going to happen. No alt seas, never again. None of this. And my thesis is just follow the liquidity, which leads all of this. It's already pointing that the number will go up. Just be patient. It's all noise. And I keep saying this to people, they're like, how can it be all noise? I'm like, because the dominant factor for crypto prices and tech stock prices, 90% of their price movement is explained by liquidity. And liquidity leads everything and price follows. So I've been showing that chart of global M2 against crypto prices. Everyone's like, this can't be right. It's bullshit. I'm like, it might be this easy. And it has been roughly this easy. It won't expect it to be perfect. But using that kind of macro lens allows you to decide, okay, what happens if the US economy slows down? What happens if there's a recession? The Fed cut rates, they add liquidity. What happens if the market crashes? The Fed cuts rates, they add liquidity. What happens? It's always the same answer to everything.
Yeah.
There's more liquidity to come. Once you realize that, you realize that they've taken all of the left tail risk, the bad stuff out, the really bad stuff. Sure, markets can go up and down, they can have corrections, but if anything bad happens, they add liquidity. So they kind of got your back, which makes it, I think, the world's greatest macro trade, because Bitcoin does, 100 to 150% a year. And they're saying that if anything goes really wrong, they'll print money. And so it's that reason alone, I think it's just the biggest opportunity.
For those that are unfamiliar, can you just explain what the banana zone is?
So the banana zone is generally the last year to year and a half of crypto markets when prices start to go vertical. And I said back in about September that we were going to start the banana zone with that huge run up at the end of the year. And then we had this consolidation that was actually driven by the tightening of liquidity that happened last quarter. Back in Q4 2024. That happens every cycle. So you get this first ramp up, then we all say, well, we can't have nice things. The market corrects. It's like, it's never going to happen. It's never going to happen. And then liquidity has to come to roll the debt. And that usually goes all the way through to the end of the year, and that becomes the banana zone. The banana zone is also when alt season happens. So when generally you can throw a dart at any crypto price and it'll go up, and it makes us all feel like geniuses.
Yeah.
That's the banana zone. The banana zone was everything gets really silly. And it makes it much easier for everybody, which is why, because you don't have to be the best in asset allocation or choosing the greatest asset. Most things go up. That's not to say everything goes up, but the banana zone is when we make most of the big gains. It's when all retail gets sucked in. It's when the taxi driver starts talking to you. It's when, your parents call you up saying, should I buy this Bitcoin thing? Or even worse, it'll be, should I buy fart coin? That's your mother. You're like, oh my God, we're truly in the banana zone. That's where we're headed. This is why I'm passionate about it, is it's been so hard for young people to be able to buy a house, to have kids, put them through school, all of the things that the big life hurdles, it's almost impossible because of the debasement of currency has meant that the value of scarce assets has gone up so much. And my argument has been from, 2015, which was like, this is the big one. This is your chance to make wealth. And not only can you make a bit of wealth, it's the fastest appreciating asset class in all of human history. So you can catch up really fast. So you just have to get involved and start that journey, but it will level the playing field for millions of people. So my view is it goes from a $3 trillion asset class today to 100 trillion in 10 years' time. So we're only 3% of the way there. And if you put it in different terms, that means there is $97 trillion of wealth that's going to get made.
Yeah.
People are going to make a lot of money, but it's not a few people. It's not like the tech barons or the bankers. This is like, Binance has 260 million customers. Now, you could lift 260 million people to change their lives. Okay, that's a big deal. There's 500 million crypto accounts around the world, so you can change 500 million lives. And if you speak to CZ or you speak to the others, they'll say, we want to have 1 billion people, 2 billion people. Well, if you can change 2 billion people's lives, that's a quarter of the world. So it's a very, very big deal. And also it's a big deal because people are getting access to dollars. So the stablecoin thing, I asked CZ about this. I'm like, well, what about stablecoins? He said, I didn't see how big they were going to be. He didn't realize, and most of us didn't realize, how desperate people are to own US dollars.
Yeah.
And so before, to get access to dollars, you had to have access to a big bank and or you could get a small amount of dollars. But normal people couldn't save in it. And somebody in Southeast Asia, they couldn't get access to dollars. And now suddenly they can get it on their Binance app immediately and send it to somebody else, US dollars. That's an incredible change for people. So there's some really big things happening that really change the world for a lot of people.
Raoul Pal's banana zone marks the euphoric peak of the crypto cycle, driven by retail FOMO, speculative trading, and macroeconomic liquidity. During this phase, Bitcoin could exceed $100,000, Ethereum may surge, and altcoins often experience parabolic growth, with assets like Dogecoin signaling the rally. Pal emphasizes the role of institutional interest and central bank liquidity in driving this phase, envisioning a transformative decade where the crypto market could grow from $3 trillion to $100 trillion. This period offers massive opportunities for innovation, wealth creation, and financial inclusion.
Crypto adoption, really, because it's a token incentive model, it's behavioral incentives. So as number go up, it drags in more people. Builders build more stuff. There's more money around, there's more applications, so you bring on new users. Each cycle, you bring on more and more users, and there's more and more applications. This cycle, we've actually seen we've seen a lot of retail activity, but not the crazy part yet. But what we're seeing, and here we are in the Middle East, is we're seeing sovereign wealth funds and state actors buying crypto. They've just started, but that's a huge shift. Before there was maybe one or two quietly doing it.
Yeah.
Now it's open. So even here, they've been buying the ETF and stuff like that. So there's a lot of new entrants coming. We haven't even heard what the US crypto policy is on their strategic crypto reserve. So we're seeing new people adopting it for different things. So Bitcoin is being adopted as that reserve asset. And then usually what happens is it flows out of the risk curve into other parts of Web3. And that's when the applications get built. And we've seen that with Solana, probably see it with Sui. We've obviously seen it with Ethereum in the past, where suddenly mass applications start getting built. I have had an interesting conversation, and one was just with CZ just now, asking him this exact question: is who the hell are you talking to? So I'm talking to 12 different governments about not just buying Bitcoin, but about how can you integrate blockchain technology within entire economies. And I'm seeing it everywhere. Large asset management firms, endowment funds, sovereign wealth funds, all of these guys saying, okay, we know we have to do something now.
Yeah.
And they're trying to figure out how do we buy it? What do we do? I was with another one of the exchanges yesterday, same thing. All they're seeing is all the big players coming in. Everyone's quite shocked by it all. The ETF providers seeing the same thing. If you speak to, whether it's Bitwise or all of these guys, they're all like, I can't believe who's now coming in for inquiries about how to do this.
Yeah.
Because the US has greenlit it now, which was the big thing. And then you've got the US saying we'll build a reserve, and here in the UAE building reserves, and a few other countries building reserves, and everyone knows, well, the game of nations is we can't be left behind.
Yeah.
Nobody wants to pay the highest price.
3 main takeaway tips just to make sure you fully optimize this market cycle, you capitalize, and you don't mess it up. You don't.
Yeah. So really, you want to hold mainly projects in the top 10 that are seeing network adoption, and don't go too far out the risk curve. That's rule number 1. Then really you can close your eyes and not worry about the volatility as much because your token is unlikely to go to zero. Okay, so that's one thing. The next thing is you will lose your mind when the market starts going up and you think, I want to make even more money. What? It's only a 3x or 10x from here. I want to make more money. And you just take leverage. And leverage is a way of parting with your tokens. Because if the market corrects, you give your tokens to the exchange, you're out of your tokens, you're out of the game. Don't get out of the game.
Yeah.
So choose quality assets, don't get out of the game. Then it's all about security. Don't lose your tokens is rule number 1. Just stay in the game. Ask anybody, all the people who are rich in this space, you ask them what they did. They weren't trading. They just held and did nothing.
Yeah.
It's really hard for people because they think they need to do something. I need to be trading. I need to be like Ansem. I need to be flipping tokens and getting the next 100. You don't need to do any of that. You just need to let the magic happen. And let the magic happen is don't lose control of your tokens. And so a lot of people start messing around thinking, you know what, I want 6% extra yield on my crypto that goes up 150% a year, but I want an extra 6%, which is insane. But they want that, so then they start finding some DeFi protocol that's set up that gives them an extra yield. And before you know it, the exchange gets hacked, you lose all your money. People do this all the time. They leave their money on their MetaMask wallet, and by mistake, they connect to a website. You've lost control of your tokens. Don't lose control of your tokens.
Raoul Pal's insights shed light on the cyclical nature of the crypto market and the transformative potential of blockchain technology in the coming decade. His concept of the banana zone captures the euphoric phase of market cycles, driven by retail FOMO, liquidity surges, and institutional participation. With Bitcoin potentially surpassing $100,000 and Ethereum leading the charge in decentralized innovation, Pal emphasizes the unprecedented growth opportunities within the crypto space. This phase, while exhilarating, also demands caution as speculative bubbles are common. Looking ahead, Pal envisions the crypto market expanding from its current $3 trillion to $100 trillion, unlocking innovation across industries and reshaping global finance. His optimistic view underlines the importance of long-term investment strategies amidst the volatility. As blockchain technology evolves, its ability to foster financial inclusion and new business models will redefine the digital economy. Do you agree with Raoul Pal's prediction of Bitcoin crossing $100,000 in the next cycle? Why or why not? What role do you think blockchain technology will play in shaping industries beyond finance in the next decade?